Good morning, everyone, and welcome to our third session of Level Up Your Customer Journey webinar series. In this webinar series, we will cover the main challenges we observe in the customer lifecycle and for each touchpoint with the customers. And we will discuss how a simpler IT platform can help improve the customer journey from onboarding to customer management to collections. My name is Jacob Fergerman. I manage our pre-sales team in Northern Europe, and I'm here today in the same meeting room, and opposite me is Buse Hanchi from our analytics team in Nordics. And in today's session, we will start with the second customer touchpoint, which is customer management. And we will today cover why appropriate, regular, and proactive management of existing customers are becoming even more important. And it is important because we need to be able to assess risk earlier, whilst also managing customer expectations. So let's kick off and explore how businesses can manage customers even more effectively by unlocking the power of data. And to start the conversation today, Buse, I'd like to have a look from a McKinsey quote back in 2023, where their message in that article is that banks are really upping their game and delivering stronger customer experience. Because the needs of customers are changing, they're becoming even more digital, the younger generations are purely digital, etc., etc. We've all heard the story. But how do you see it? Because customer experience is now a strategic differentiator for banks. At least that's what we have talked about for the last several years. But how do you see it in real life with the banks you operate with in Nordics and Europe? And how do we actually support the messages, how banks need to articulate their future value proposition? Because the digital evolution is changing.
Yes.
So I'm really keen to hear your thoughts on it, really to kick off the conversation today.
Thank you, Jacob. Very good start for today's session. Before coming to our experience in the market with our clients, I want to first refer to our Credit Insight report from 2025. It is from this July, so very recent analysis conducted on over 1,000 participants, senior decision makers, and mostly from financial institutions, but also a lot of telco companies joined to that exploration in the report. And Denmark and Norway was part of this report, the questionnaire with the participants, and we have seen a lot of relevant points also to the customer management focus in the banks or in telcos. So for the audience, if you are interested in, you can also download our report by using the QR code in that page. But if you can move to the next slide. So I want to emphasize that in this report from this July, it was very interesting to see that one of the main business focus areas for the decision makers is still customer management. So McKinsey stated it in 2023, it's a game changer. Of course, there are a lot of developments in that space, but we can see still 59% of the respondents find the early and proactive identification of vulnerable customers is one of the key focus areas or the biggest challenge for the next year. And 54% of the participants also have already observed that the volume of customers defaulting or entering into collections for the last 1 year is increasing. So it is obvious that there are some developments, but still it's a challenge or pain point for the organizations. We can see it in that recent credit report search. And when it comes to our own experience, we have seen many different challenges. I want to mention 5 of them. One is competition. And competition is high. We started to hear more and more churn behaviors among the banks or among telcos or also in the other verticals. So this is one of the key problems if legacy systems are there, if there is not enough technology and flexible platforms in place to capture these kind of behaviors at the customer side is tough, and it is very important to capture these customers that are in the competitive world, eager to move to another competitor in the space. And customer expectations, you also mentioned them from the beginning. So it is changing, definitely a digital era, and digital generations are there. So they are very eager to have more meaningful touch points, personalized touch points, a good digital journey. For example, more than 50% also stated that if the digital journey is not good enough, they will leave their bank. Regulation is another challenge we can see in the customer management space because it is increasing. NPL management, forbearance management, forborne exposure management, IFRS 9, putting a lot of pressure on the institutions that they are doing the customer management right, so that they don't have so much customers ending up in the collection stages. Flexibility is also important in terms of the simplified platforms because there are a lot of data points coming. AI, machine learning is also on top of the agendas in every organization, so that the solutions or the platforms should also enable these things. And one last thing is the macroeconomic environment. There is a lot of uncertainty in the last recent years, global crisis, high inflation, high interest rates. So important to also take it into account in the customer management side. So these are the things I can list down, but I would like to also convert it to you. How do you see it from your perspective? Are they relevant?
I think just to dwell for a couple of more seconds on this slide, I think it's really critical components that you're addressing here, because the legacy systems are really locking some institutions in a very tight framework where their flexibility is minimal, and that's also one of the dimensions we're addressing in this webinar series, is how to get out of that trap, if I can use that expression, because the potential is there, and I'd like to spend a few minutes on that one, because competition is fiercer than ever before. We can see banks consolidating. Smaller banks struggle to be competitive. They need to either partner up or be bought by bigger ones in order to make sure they have relevance going forward. And we see that in the Nordic markets, particularly at the moment. And also customers expect more. They expect much more service, much faster service. One of the elements we are seeing also from the US being addressed is two things. Banks should become much more like an airline. The loyalty scheme should be possible in order to be attractive to remain with the bank that you are with. But also that AI can also be used against banks. I, as a customer, can potentially in a couple of years' time click on a button, and the AI will do all the paperwork for me, and I can go to a bank that offer better price, better service, without any heavy lifting for myself or for the customers. And that's also one of the critical competitive advantages some competitors might have in the future. And then, of course, the regulatory landscape is not going away. So having the platform allowing the flexibility using data, models, and technology seamlessly, and we're coming back to that. And then the flexibility in the same platform is absolutely crucial with machine learning, AI, etc. And of course, the geopolitical situation is visible today. And that also means that banks, financial institutions must adhere to the current situation, whether it's going one way or the other way. And that also is crucial, making sure that the platform can allow for changes from a macroeconomic perspective. And speaking of macroeconomic perspective, I'll curveball it back to you, Buse, because I think it's also important that we're also on the same page on how does it actually look from a Nordic perspective, macroeconomic wise, and what is the potential impact on banks?
Yes, I want to also address that topic because we started our conversation with vulnerable customers, how to early identify and being proactive. But is it a real problem for Nordics or Northern Europe? I also want to elaborate a bit on that space. So in Nordics, to be honest, we don't see that much high defaults or bad customers, non-performing loans. So I have prepared a very brief overview from European Banking Authority's risk dashboards. You can see on the left-hand side the non-performing loans in both in all Nordic countries are quite stable. So for the last couple of years, there is no increase in these numbers. And when we look at the foreign exposures, which is a bit step before being a non-performing loan, there is also not a much big jump in the foreign exposure. So it looks like it is also not a big problem as of now for Nordics. Only in Sweden and Finland we can see slight increase since 2023. However, why it is important to discuss customer management for our market is because of underperforming loans. So all these macroeconomic environment, the pressure on the household economics is now visible in stage 2 loans. In IFRS 9, we call them stage 2. But we can see that there's a rise in underperforming loans, especially in the recent periods. There's a slight recovery or improvement in the last 1 year. But still, it is giving some alerts why it is that important also for Nordics to have a good customer management process in place and take proactive actions on these clients so that they are not ending up in forborne or NPL stages in the next days.
No, and I just want to emphasize what you're saying there, Bruce. I think we saw during Corona, but also with the high increase in inflation 3 years ago, the massive focus, we need to do something.
Yes,
when
I agree.
When the environment changes, and it's very important that financial institutions have arms and legs and able to do whatever they need to do, and not being relying on old IT systems 6 months, 12 months down the line. And it's really one of the key points, and I think very, very valuable learnings we gained there.
Yes,
absolutely.
I agree.
But taking it from a macro level, Bruce, to a micro level, because ultimately it's all about individuals. And I think one of the key learnings I've had is that it's always useful to look at concrete examples, really to understand how to orchestrate systems and processes. And I'd like to take one example here with Jens, whom we see on this slide. Jens is struggling with his payments. He has some employment challenges and new life conditions. And that means that his consumer loan is now 32 days past due. That means that he's now in stage 2, meaning now the default probability of default is lifetime and not only 12 months, meaning the provision level is higher.
Yeah.
The level of expected credit loss is now significantly higher than it was before, 3 days ago. So what should a bank consider if they want to transform themselves, let's say, from a legacy system mindset, perhaps even, to the approach that we're considering here, Buse? I'm very keen to hear your suggestions and ideas on that.
Yes, very good example. So you mentioned that he's already in 32 days past due. So it looks like not enough proactive monitoring on these customers have been done so that he already fall into stage 2. But there is something that at least to prevent him being stage 3 or make him again paying properly. So there are a lot of data points that could show some early warning indicators of that he will struggle. So you mentioned that he is having some employment challenges. He has a new life condition. Is it known by the institution? So is there enough triggers designed in that organization so that they could know it before he fall into that 32 days past due status? So generally in the organizations, in the banks, there are a lot of data points on Jens, like variety of products, delinquency information in the recent time, credit limit usage, debit credit account trends, his transactional data trends, and the default or delinquency information from the other institutions. So all these could be the indicators of he will be in trouble in the next couple of times, and if he's a high value customer or medium level customer for the organization. So first of all, the important thing is that the platform should enable you to get all these data into one place. And there is also the loss of job or decrease in income kind of indicators that could show Jens employment challenges. Or if you also collect the household level information on him, that maybe he has a new baby. So this kind of information should also be used in the monitoring of these customers. And of course, the banks or telcos, institutions has some scores, early warning scores, to be able to use all these data through analytics and then identify the probability of him being in a worse delinquency bucket from the very beginning. These are the data and analytics piece, but one crucial element is also to know then what. So if you are able to interpret all these data points, you should also be managing the right next step personalized route for Jens from the beginning, and your platform should be able to enable to put all these things in one place to have the full end-to-end process on Jens. Then this is how to be successful in customer management.
And I think very interesting points. And also one of the elements we discussed in our first webinar is that this is, let's say, common sense. And we can always ask, why are we here today and not 20 years ago? Because why are banks not doing this today? Or some banks, at least, not all, of course. And it is really because of legacy systems is the limitation. But I'll move forward now to what you mentioned before, Boos, around churn, because churn is one of the elements that is a high focus area. And maybe you can share a couple of reflections on that part.
Sure. Thanks for the opportunity. We always forget the voluntary churn when we start to talk about involuntary churn or payment difficulties, because customer management is two-folded. So of course there are customers with challenges of payments, but also there's a customer base who are not happy with the services or the journey or very appealed by outside the competition we also talked about. So voluntary churn is another thing that should be considered in the customer management and from this end-to-end perspective. So you can have churn identification or churn patterns by using different data points. And you can also have churn scorecards that can predict the probability of churn, voluntary churn among these customers. But of course, again, it should be connected to the next action. So it is not only data and analytics, but a software or workflow system that should enable you to take the right action on these customers. So it can be about analyzing the churn patterns when we talk about it. It can be that this customer has changed their financing institution recently, or they are contacting to your customer service very frequently in the recent times, or which channel they are coming from can also show differences in their churn patterns. Or they can be very happy with you, so you can also understand it from they are referring your organization to their friends or another company. If they are long time with you, so they are loyal with you because they have also a lot of products that link them to your organization. So all these churn identification tools or data points should be used in personalization of the next action of these customers.
I think that was a very good power talk on churn. Very much appreciated. And I think the first part of this part 3 in the webinar series has been the easy one. We have addressed the challenges.
Yes.
And now I'd like to change gear and let's make not backward looking, but forward looking. What solutions are out there to manage these challenges that are obvious to us and likely also the audience? So, but what options do we have?
Sure. The solution is a well-designed customer management system. So we talked about data points that will help you to identify different customer behavior in your portfolio. We also talked about scores or predictive modeling that will show you the probability of these customers being involuntary or voluntary churn. This is another layer. And we also talked about then what is your next action on these customers, so to prevent the churn pattern and also to prevent the bad payment behavior. So we recommend a full end-to-end system that will take all these things into consideration and that will enable personalized and effective customer management strategies for your organization. So it will reduce the cost of defaults, it will reduce the cost of collections, and also from churn perspective, it will reduce the cost of losing valuable customers to your competitors. It will have a lot of automation gains and to let you know your customer base much better, along with default prevention and regulatory compliance. So I want to give one concrete example. Once we work with our customer, one of our customers at Tier 1 bank in that space, we together designed a customer management system. We have identified early warning indicators. We have developed early warning scorecards, behavioral scorecards, and then put them in a full strategy roadmap so that they also got the personalized routes for different customer segments. And by using this system, they managed to decrease their delinquency accounts by 18%, reduce the collection cases by 25%. And it is not only focusing on the bad payers, but also finding out the high value customers. They could also improve the marketing actions and marketing campaigns, upsell, cross-sell activities. So it's a full package that is focusing on many different segments in your portfolio that helps you to have an operational efficiency, decreasing the provisions because you just avoid stage 2 or MPS. So it's a very good case that I would like to mention today to our audience as well.
Fantastic. Yeah, very, very good example. And let me try to put a couple of dimensions to your core message here, Buse, because we often split the dimension into 3. We have customer segmentation, we have early warning triggers, personalized customer strategies when we discuss customer management activities. And one of our mindset is really an apple a day. Keep your customer base healthy by focusing on these 3 core approaches. That's really key for when we discuss with our customers in terms of both segmentation, because we know the rule is show me your friends, I'll tell you who you are, but also show me your neighbors and I'll tell you who you are. And it's very, very recommended when we segment on customers that we try to do the similar treatment to whatever customer segments that is relevant for that particular financial institutions. But certainly also early warning. Here we use a metaphor with Isaac Newton sitting below the tree. What would have happened with gravity if he had had an early warning with the apple falling down the tree? But it's really the key thing here is to be able to identify information, data points that can give a warning that this customer is about to default or come into a difficult financial situation. If you have a household where the 2 main adults are suddenly living in 2 different addresses, etc., can be key information in addressing some activities before it's too late. Coming back to the example of Jens, what would have happened if we had done some activities 10 days before, meaning that Jens would not have entered in 32 days past due, but he had remained in stage 1, would have been completely different level of provisioning, meaning that the expected credit loss would have been reduced had we been able to use early warning triggers earlier. And also with the personalization of customer strategies, we know from different type of real life experiments that using certain type of information also being provided in a different format can also be relevant in order to make sure that the customer actually take up the loan, the credit, or do the purchase in the e-commerce store. But I know you can dwell a little bit more on that, Bo, so I'll give the next slide to you so you can go a little more detail on how we have approached it.
Sure. So if we go through Jens' example, for example, Jens would fall into the stage 2 segments, delinquent customer segments with maybe unemployment issues or employment challenges, plus extended family conditions. So they are all referring to these segmentation, just an example. But what we are doing is to divide the portfolio into different subgroups by using the data points, but also the probability of moving to the worst bucket, who has the highest probability to be even worse, so to prioritize them in a different route. Here you are just seeing a personalized route visual. So depending on which group you are falling into, your action points will also differ if you will first start with an SMS receival or just an email or direct phone call or visit to a branch is required. So this is the segmentation and the personalization of the route I would like to mention. And also the strategies will change based on your status. So if you are the vulnerable customer group, or if you are the high value customer that is considering to churn group, or if you are in the high value customer, loyal one and deserve an upsell, cross-sell, they will be all linked to the action in the roadmap. This is strategy side, but also important to optimize who will be the action owner. Of course, we want to do it as much as possible self-serve to reduce the man-day effort, FTE, whatever. So it can be AI chatbots and self-service that can be linked to that personalized route, or it can also be linked to a customer relationship manager or collections agent or collections company if the case is becoming worse or more severe in that sense. So in the customer management system, we are considering both segmentation, the next action, but also the ownership to optimize the process to make it as automated as possible.
I'll just one point to what you mentioned before, Bruce. I think is interesting is also when we last year saw the ledelsesbekendtgørelse coming out in Denmark, which is what are the rule of thumb for boards in banks. What are they responsible for? And the key word for me is accountability. Is that they are responsible to make sure that there's a clear level of responsibility across all functions within the customer management space. So that's also my question to you: is that approach you're mentioning here is really addressing that the responsibility from board level is tailored down to the management of Jens?
Exactly. In ledelsesbekendtgørelsen, they made it very clear that there is a need for early warning system, customer management process, and also directly linked to each action. So the action roadmap, we see the most missing point in that sense in the market to be filled in. And the board of directors is the main responsible to ensure that these competences and the systems, platforms are in place to ensure that.
Fantastic. Thank you.
So, Jacob, I want to then ask you my question.
Yes.
How do you see that, how to ensure that this customer management system can be up and running and easy to maintain in the organizations?
I think easy is a strong word, but at least more seamless is, because when I built my first customer management system 20 years ago, it was a mosaic of different solutions with APIs going back and forth. And our approach with our Ascent platform is to have one platform with all products, or all the products that is relevant for that particular activity. So that means the data, meaning the deployment of models, execution of models, and the strategies, customer management strategies. Having that in one platform reduces complexity. And it also means that business users can take over much more responsibility that historically has been with the IT department or IT resources. And it's really the philosophy of Experian is as much as possible should be in the hands of business users to minimize friction and to be able to meet market needs much faster than we have seen historically in legacy systems, where some of them are back from the 70s, 80s, early 90s. And that's really one of the key things we would like to address is to have one platform with as much as possible of the different services combined is really our recommendation. And that's also our mindset in this webinar series. And this is a quick graphical illustration of how our studio looks like, where depending on how many of our solutions that our clients subscribe to or have license to, then they can access the different environments accordingly. And so, Buse, but in real life, how does it then work?
Yes, I also want to refer to our platform, so how it looks like, some screenshots from the platform as well. So for customer management, specific models are key. Of course, the usage of data, early warning triggers, early warning scores, or upsell, cross-sell scores, any kind of analytical tool that we want to embed into that segmentation level can be developed within this modeling platform within Ascent. We call it Ascent Sandbox. Then the matter generally is that, yes, modeling is something, but how to deploy it seamlessly, not to wait in IT lists, waiting for your turn that your project will be implemented in. So it is one of the main pains, but in this solution, we have the model ops capabilities that the business user, as you said, can click and then deploy their model and track the versions within the same environment, in the same login, let's say. Deployment is also fast in the solution, which will enable your customer management to be more flexible. And the final part is about this action roadmaps or customer management strategies to enable the next action. It is the decisioning component, and our Power Curve Strategy Manager, or this decisioning component of Experian, is also embedded into that solution, so that it enables this end-to-end setup of the customer management system. So it will also give you the flexibility of feedback loop. You can monitor if your customer management system is working well. And if you don't see that the KPIs are reached, then you can revisit and update your segmentation and the personalized routes in that way to work with your customers.
And when I hear you talk, Buse, and when I see this slide, one word that comes to my mind is collaboration between units.
Exactly. So it is not only analytics, especially when it comes to customer management, it is from underwriting to monitoring teams. All business units are heavily involved. Even finance team, because of IFRS 9 staging rules, also impact capital and provisions. So that kind of a setup should be used by different business units and enable the communication between different business units. You are fully right.
Fantastic. And Buse, we're coming close to an end.
Yeah.
And I'm very keen to hear your final thoughts, a quick wrap up of what we have talked about so far. Some final words from you?
Yes, I think customer management is all about your customers. Literally, it's the obvious from its own wording. So it is very important that you should be there when your customers need you, even proactively. Maybe they are not aware they need you, but you should be there even before. And you should be offering what they need based on their personalized behaviors and the preferences. And a unified platform will be your enabler to be able to set up this management system so that you can find the right next actions for your given client.
Fantastic. Thank you, Buse.
Thank you, Jacob.
And we have seen today how the right data strategy and modern technology platform can transform customer management activities. I really hope that you have found this session insightful and helpful. And in our next session, we'll explore how to spot trouble before it hits your bottom line. I'd like to say a big thank you to you, Buse.
Thank you, Jacob.
For sharing your valuable insights with us today. And to the rest of you, thank you and stay tuned. I'll just go to the next slide where if you did not download and still want to download the Forrester report, I'll just keep the slide there for a couple of more seconds. Thank you.
Thank you.